Bienvenue to us. Welcome to Business Morning. Let's take a look at the world's business headlines. Berlin comes to the rescue of the troubled German bank IKB. This news is on the front page of the German daily, the Handelsblatt. IKB will receive a 1.5 billion euro bailout, two-thirds of which will be provided by the government, the rest by German banks. This is the third rescue package for the bank, which was severely hit by the subprime crisis. More on that, of course, later in this edition. French public broadcasters on strike over TV advertising reform. This is in the French daily Les Echos. A high turnout in yesterday's protest against President Nicolas Sarkozy's plan to cut advertising on public TV. Staff are concerned about how the loss of income will be compensated. Some concerned about the very future of their channel. Next, gambling in the skies. The Financial Times of London reports that European aircraft maker Airbus, based in Toulouse in southwest France, has been approached by potential buyers from Asia who'd like to turn its A380 Super Jumbo into a flying casino. Should the talks lead to an order soon, a fully fitted casino A380 could be delivered between 2012 and 2017. What's the betting on that? Now, German bank IKB secured a third bailout from its government. The rescue package will bring IKB's total financial aid to about 7.7 billion euros. The bank became the first German casualty of the subprime crisis after invested some 22 billion euros in US mortgage-related assets.
After yesterday's meeting, Germany appears on track to push through a third rescue package into IBK after politicians said they had no alternative but to pour more money into the beleaguered bank. They fear a domino effect across the sector.
It would be the first German bank to declare bankruptcy in a very intense financial climate, both in Germany and Europe.
The corporate lender, which has already been propped up by two previous injections of more than 6 billion euros, has become one of Germany's highest profile casualties of the global credit crisis since its near collapse last June. Its existence is under threat in the face of new write-downs on billions of euros of toxic investments that remain on its books. The lion's share of previous bailouts had been shouldered by Germany's state bank KfW, which owns a large stake in IKB. Now the government wants other commercial banks to pitch in. Germany may have to pay a higher price than it bargained for in saving a stricken lender. It might further fracture Angela Merkel's already fragile coalition government, with some Christian Democrat politicians saying that German taxpayers cannot continue to pick up the bill for IKB's troubles, as favored by the Social Democrats.
Now then, the U.S. economic stimulus plan can now come into force. On Wednesday, President Bush signed a $167 billion plan which aims to bolster the world's largest economy, mainly through tax rebates. Okay for some, I suppose. Stocks in Asia have posted some of their biggest gains in 3 weeks after upbeat economic data coming out of the States and Japan blunting fears of a recession. I think Nikkei up something like over 4% in today's trading. Tokyo's advance came on the back of a third straight rally on Wall Street. Our business editor Douglas Herbert is here with a further explanation. Doug.
Yeah, it seems Cupid's arrow has struck Japanese markets today. Investors are in love with some of the latest economic data, Mark. Excuse these bad puns. It is Valentine's Day. Asian markets really got their first boost. They opened already in a good mood. Why? Because there was a surprise jump in January in retail spending, retail sales in the U.S. This is really a key figure. It sounds like more of the same old, same old. But what it is consumers are 3/4 of the U.S. economy. Any signs that consumer spending is sort of keeping pace with or ahead of expectations is going to give markets a boost. Spending was up a little tick, 0.3% in January. Not much, but they were expecting a decline.
Is there a Valentine's Day effect? I mean, I'm a bit. Are we being silly about this, or?
I don't know, it's an aphrodisiac perhaps, just the sort of, that February 14th, seeing that date on the calendar might put you in the buying mood.
Okay, calm down, Doug, calm down.
But I'm trying to calm down. But literally, the devil here also lies in the details, because the figures for retail sales also included things like gas and automobiles. If you take those out, retail sales were flat. You do have a pretty grim picture elsewhere in the economy. You have big retailers, Macy's, Home Depot, cutting jobs. The overall picture is not good. Quickly to move to Japan, another smoke and mirrors statistic here. Growth, 3.7% up in the fourth quarter, the final 3 months of last year. That's fantastic, twice as much as expected. Let's raise the curtain, look behind it. What you really have is a picture where Japan is still struggling to pull out of its recession from 10 years ago and keep its expansion going. Wages are rising, wages are falling, excuse me. Prices are rising, consumer sentiment down, housing investment way down. Japan has a long way to go, as does the U.S., before they are out of the recession woods. So both of these statistics hiding a grimmer picture.
Okay, but the Nikkei up today.
Yes.
Okay. It's a roller coaster ride, the economy, isn't it? We stay in Asia for our daily updates of business news. Our Beijing correspondent Henry Morton joins us. So, Henry, if Japanese growth has beaten expectations, inflation concerns still putting a strain on the Japanese economy.
Yes, that's right. Japan's wholesale prices are rising at their fastest rate in 27 years, pushed up by increasing oil and wheat costs that are spurring inflation as the economy cools. Producer prices shot up 3% in January from the year before, after a 2.6% gain in December. However, the central bank is expected to keep interest rates at 0.5% this week in order to support growth in the fragile economy. There was bad news also for Rio Tinto, the world's third largest mining company, announcing full-year profit fell 1.7%, well short of analyst expectations. Net income dropped nearly 1.9% to $7.3 billion and puts pressure on CEO Tom Albanese as he tries to keep the company independent. Rio is currently the subject of a $138 billion hostile bid from BHP Billiton. We end in Macau, where the number of hotel rooms in the territory expanded to just over 16,000 in 2007, an increase of 24.4% from the year before, as more large-scale casinos opened in the territory and Macau looks to assert itself as the gaming capital of the world. The average hotel occupancy rate also rose last year to 77.2%, a 5% increase on 2006. Those are then the stories that are making the business news here in Asia today. Back to you in Paris.
Henry, you can always get a room in Macau. Fantastic. Now, China has suffered its first defeat at the WTO since joining it in 2001. The World Trade Organization upheld a complaint by the United States, the European Union and Canada over Chinese import tariffs on car components. Beijing says car makers in the country have to use at least 60% Chinese-made parts or pay higher taxes, thus penalising imported foreign car parts. The ruling says China must end this policy to meet its WTO regulations. Australia's unemployment fell to 4.1%, its lowest since 1974, boosted by the mining sector. Employment is expected to continue to rise after advertisements of job vacancies climbed to a record in January. And before we leave you, let's take a look at the stock markets. Wall Street shares are powering ahead yesterday as the surprise rebound in US retail sales for January eased fears about the economic downturn. In Tokyo, the Nikkei closing. Figures for you coming on the screen now. There you go, up 4.27%. Those are the main business stories. Watching France 24 EN. Stay with us.